In March of 1981, a 37-year-old woman named Margaret Sullivan stood in the cemetery outside Cedar Falls, Iowa, watching them lower her husband into the ground. And the only thing she could think about, besides the fact that Tom was gone and she'd never hear his voice again, was the number 50,000. $50,000. That's what Tom owed when he died. $50,000 in equipment loans for a John Deere 4440 he bought in 1978 and a new combine he financed in 1979, convinced that modern equipment would let them expand their 280-acre operation into something substantial. Tom had been 41 when a heart attack took him, working in the field, probably pushed too hard by stress and long hours and the constant pressure trying to make loan payments in an agricultural economy that was collapsing. Margaret had 2 kids, Sarah, 14, and David, 11, a mortgage-free farmhouse that Tom's grandfather had built in 1903, 280 acres of land that had been in Tom's family for 3 generations, and equipment debt that exceeded their annual farm income. The bank had been sympathetic at the funeral, but a week later, they were less sympathetic and more direct. She had 6 months to figure out how to make the payments, or they'd repossess the equipment and possibly force a sale of the land to cover the deficiency. What Margaret did next, how she saved the farm and paid off $50,000 of debt in 5 years, became one of the most remarkable stories in Black Hawk County, and it started with a decision that everyone told her was insane. Before I explain what Margaret Sullivan did, you need to understand the economic catastrophe that was hitting American agriculture in 1981. This wasn't a recession. This was a collapse. Interest rates had spiked above 20% as the Federal Reserve tried to control inflation. Commodity prices were falling. Corn had dropped from over $3 per bushel in the mid-'70s to under $2 and was still declining. Land values, which had seemed like they'd rise forever, had peaked and were starting to crash. Farmers who borrowed heavily during the boom years of 1973 to 1978 were discovering that the assumptions underlying their loans, high prices, appreciating collateral, stable interest rates, were all wrong, and they were going bankrupt at rates not seen since the Great Depression. Tom Sullivan had been one of those farmers. Not reckless, not stupid, just unlucky in his timing. He bought the John Deere 4440 in 1978 for $52,000, financing $48,000 over 7 years at 9.5%. The 4440 was a serious machine, 145 horsepower, turbocharged diesel, the kind of tractor that could handle heavy implements and cover serious ground. Tom had been farming with a 1957 Farmall 450 that his father had bought used in the early 60s, and compared to the 4440, the Farmall felt like a toy. The John Deere was powerful, efficient, comfortable. Tom had felt like he was finally running a real farming operation instead of playing at it with antique equipment. Then in 1979, convinced that he needed to capitalize on what he thought was a temporary window of high grain prices, Tom had bought a used John Deere 6600 combine for $28,000, financing $25,000 over 5 years at 11%. His total equipment debt had climbed to $73,000. His annual payments were roughly $14,500. On a good year, farming 280 acres, Tom could net maybe $25,000 after operating costs. The payments were tight, but manageable. Then 1980 brought drought. Yields dropped to 85 bushels per acre. Corn prices fell to $2.10. Tom's net income before equipment payments was maybe $12,000. After payments, he was underwater by $2,500. He covered it by not taking a salary and using savings. He'd told Margaret it would be fine. That next year would be better. He'd said that while clutching his chest in bed at night, when he thought she was asleep, dealing with what he called indigestion, but was probably his heart giving him warnings he ignored. On March 15, 1981, Tom was disking a field, preparing it for spring planting, when the heart attack hit. He was dead before the 4440 even rolled to a stop, the tractor idling in the middle of the field until Margaret found it 3 hours later when he didn't come home for dinner. At the hospital, they told her there was nothing they could have done. Massive coronary. He'd probably been dead within seconds. Small comfort. Margaret had grown up on a farm but hadn't been actively involved in the operation since she and Tom married in 1965. She'd raised the kids, managed the household, kept the books, but she hadn't driven a tractor in 15 years. She knew the basics, how to start equipment, how to operate at a fundamental level. But she wasn't a farmer. Not really. Tom had been the farmer. And now Tom was gone, and she was left with 2 traumatized kids, a farm that needed to be planted in 6 weeks, and debt that was going to eat them alive. The bank officer, a man named Ronald Gardner, who'd approved Tom's loans, came a house a week after the funeral. He was polite, apologetic, but clear. "Mrs. Sullivan, I'm very sorry for your loss, but we need to discuss your husband's loan obligations. The total outstanding balance is approximately $50,200. The monthly payment is $1,210. Those payments need to continue, or we'll need to explore other options." Margaret, still numb from grief, asked what other options meant. Ronald shifted uncomfortably. "We could repossess the equipment and sell it. If the sale doesn't cover the loan balance, we'd need to secure the deficiency against the land." "I don't want to do that, Mrs. Sullivan, but the bank has obligations to its depositors." Margaret felt cold. "If you repossess the equipment, how do I farm?" Ronald shook his head. "You probably don't. Most widows in your situation sell the land and move on." Margaret looked at him. "This land has been in Tom's family since 1889. My kids are 4th generation. I'm not selling." Ronald sighed. "Then you need to make the payments. Can you do that?" Margaret had no idea if she could or not, but she said, "I'll find a way." After Ronald left, Margaret sat at the kitchen table and went through the farm's financial records. The situation was worse than she'd thought. Tom had been deferring some operating expenses, hoping to catch up after a good harvest. They owed $3,400 to the seed company, $2,800 to the fertilizer distributor, and had about $1,200 in the bank. The property taxes were due in September, another $2,600. The equipment payments were $1,210 per month. To make it through the year, she'd need to plant, tend, and harvest 280 acres, cover all operating costs, make 12 loan payments totaling $14,520, and somehow feed her family. She'd need to generate at least $35,000 in gross revenue just to break even. At current corn prices of $1.95 per bushel, she'd need to average 127 bushels per acre. The county average was 105. She was sitting there, staring at numbers that didn't work, when her neighbor, a 71-year-old farmer named Walter Henning, knocked on the door. Walter had farmed the land adjacent to the Sullivans for 50 years. He'd known Tom since Tom was a boy. He sat down at the kitchen table and got straight to the point. "Margaret, you can't make those equipment payments." She looked up at him. "I have to. If I don't, they'll take everything." Walter shook his head. "If you try to keep that 4440 and that combined, they'll take everything anyway. Those payments will bleed you dry. You'll struggle for a year, maybe 2, and then you'll fail. I've seen it happen a dozen times." Margaret felt tears starting. "Then what do I do?" Walter leaned forward. "You sell that John Deere equipment. You take whatever you can get for it, pay down the loan as much as possible, and you negotiate with the bank to restructure what's left of the payment you can actually afford. Then you farm with what Tom had before he bought all that fancy iron." Margaret blinked. "The Farmall?" Walter nodded. "The 1957 Farmall 450. It's still in your equipment shed, isn't it?" "Yes, but Tom stopped using it when he bought the 4440. It's been sitting for 3 years. Does it run?" "I don't know. Maybe." Walter stood up. "Let's go find out." They walked to the equipment shed, and there it was. The Farmall 450, covered in dust, tires flat, looking abandoned. It was painted red and cream, though the paint had faded and chipped over the years. Walter walked around it, checking things. "Your father-in-law maintained this tractor beautifully. Tom did too, until he got the John Deere bug. If the engine isn't seized, we can get it running." Over the next 2 days, Walter came over every morning, and he and Margaret worked on the Farmall. They charged the battery, changed the oil, drained the old fuel and put in fresh gas, cleaned the carburetor, and checked all the fluids. On the 3rd day, Walter hit the starter, and the engine turned over. It didn't catch at first, but after some coaxing and adjusting, it fired up and settled into a rough idle that smoothed out after a few minutes. Margaret stood there listening to that engine and felt something shift inside her. This tractor still worked. It was old, it was worn, but it worked. Walter shut it down and looked at her. Here's what I think you should do. Sell the 4440 and the combine. They're worth maybe $65,000 together at auction if you're lucky. The market's terrible right now. That'll pay off most of the loan. Negotiate with the bank to refinance whatever's left over 5 years at a payment you can handle. Then farm with this Farmall. It's not fancy, it's not powerful, but it's paid for. Your operating costs will drop by 70% because you won't have those loan payments. Margaret asked a question that was terrifying her. Can I farm 280 acres with a Farmall 450? Walter was quiet for a moment. It'll be hard. You'll work longer hours than Tom did with the 4440. You'll have to rent some equipment you don't own. A planter, a combine for harvest. But yes, it's possible. Farmers did it for decades with equipment like this. Margaret made her decision. She called the bank and told Ronald Gardner she wanted to sell the John Deere equipment. He was relieved. This was the outcome he'd hoped for. The auction was held in early April. The 4440, which Tom had paid $52,000 for 3 years earlier, sold for $34,000. The combine brought $27,000. Total, $61,000. After the auction fees and Ronald applied the proceeds to the loans, Margaret still owed $11,800. Ronald restructured it as a 5-year note at 12% interest. Her new payment, $262 per month. It was still painful, but it was survivable. Now came the hard part, actually farming. Margaret had 6 weeks to plant 280 acres before the window closed. She didn't have a planter. Tom had been renting one from a neighbor. She didn't know how to calibrate it, set the depth, or adjust the row spacing. Walter Henning became her teacher. He showed up every morning at dawn and walked her through everything. How to hitch implements to the Farmall's drawbar. How to set the throttle for different operations. How to read the engine temperature gauge. How to tell when the tractor was working too hard. He taught her how to operate the rented planter, how to fill the seed boxes, how to watch the depth and make adjustments on the go. Margaret planted from sunrise to sunset, sometimes past sunset, using the tractor's dim headlights. The Farmall 450 produced about 50 horsepower, roughly a third of what the 4440 had. Everything took longer. What Tom could have planted in a week took Margaret 3 weeks. Her back ached. Her arms were sore from wrestling the manual steering. She came in every night covered in dust and diesel exhaust, so tired she could barely eat before collapsing into bed. Sarah and David tried to help when they got home from school, bringing her water and sandwiches in the field, but they were kids dealing with their own grief. They couldn't operate equipment, but she got it done. By mid-May, all 280 acres were planted. Corn and soybeans, the same rotation Tom had always used. Margaret spent roughly $8,000 on seed, fertilizer, and fuel, half what Tom typically spent because she cut back on inputs, used less fertilizer, and the Farmall's fuel consumption was minimal compared to the big John Deere. Now she just had to wait and hope. Summer of 1981 was decent weather-wise. Not great, but adequate. Margaret spent June and July cultivating, controlling weeds with rented cultivator pulled behind the Farmall. The neighbors watched her with a mixture of admiration and pity. Some thought she was brave. Others thought she was crazy, that she should have sold the land while it was worth something and move a town. A few thought she was being foolish and stubborn, hanging on to a farm she couldn't possibly manage alone. Margaret didn't care what they thought. She was too busy working. In August, Walter Henning's health started declining. He'd been battling cancer and hadn't told anyone, including Margaret. He died in September, 2 weeks before harvest was supposed to start. Margaret went to his funeral and cried harder than she had at Tom's, because Walter had saved her life and she'd never have the chance to repay him. Walter's son, who lived in Des Moines and had no interest in farming, told Margaret that his father had talked about her constantly those last months. He said, "You had more grit, than most men he'd known, Walter's son said. He was proud of you. Harvest came in October. Margaret rented a combine from a local operator, paying him a percentage of the crop to cut her acres. Her corn averaged 98 bushels per acre, lower than the county average, but respectable given her conservative inputs and the stress of the year. Her soybeans did better, 42 bushels per acre. She sold most of the crop in November. Corn was at $1.88 per bushel, soybeans at $5.40. Her gross revenue, approximately $40,600. After all operating costs, equipment rental, and the bank payments she'd been making monthly, she netted $9,200. Not much, but it was positive. She'd survived the first year. Over the next 4 years, Margaret developed a system. She farmed conservatively, using minimal inputs to keep costs low. She rented equipment she couldn't afford to own. She traded labor with neighbors. She'd help with harvest if they'd help her with spring planting. She learned to do most of her own equipment maintenance on the Farmall, changing oil, replacing filters, adjusting valves. When something broke that she couldn't fix, she found the cheapest mechanic in the county and bartered when she could. Vegetables from her garden, eggs from her chickens, whatever worked. She also made a discovery that changed her economics. The Farmall 450, old and underpowered as it was, cost her almost nothing to run. In a typical year, she spent maybe $100 on fuel. It ran on gasoline and wasn't particularly efficient, but it was light and didn't work as hard as the bigger tractors. Maintenance was maybe $500 per year, most of which was parts she installed herself. Her total equipment-related costs were under $1,500 annually. Tom's 4440, before he died, had cost over $4,000 per year in fuel alone, plus dealer maintenance bills that averaged $2,000. The insurance and depreciation on the newer equipment had been hidden costs that added up. By farming with the old Farmall, Margaret had cut her fixed costs so dramatically that she could survive on much lower gross revenue. The years 1982 through 1985 were brutal for American agriculture. Corn prices bottomed out at $1.65 per bushel. Land values collapsed. Iowa farmland that sold for $2,000 per acre in 1981 was going for $900 by 1985. Interest rates stayed punishingly high. Across Iowa, farm foreclosures were happening weekly. Margaret would read the auction notices in the county newspaper and recognize names, neighbors, people she knew from church, families that had been farming for generations. All gone, but Margaret kept farming. Her gross revenues those years were never spectacular, ranging from $32,000 to $45,000, depending on weather and prices. But her costs were so low that she always came out slightly ahead. And every year, she made those $262 monthly payments to the bank. In 1986, she made the final payment. The loan was paid off. $50,000 of equipment debt, eliminated in 5 years. Ronald Gardner, the bank officer, called her into his office to close out the account. He looked at her with something like awe. "Mrs. Sullivan, I need to tell you something. When Tom died and I saw your situation, I didn't think you'd last 6 months. I've been in agricultural lending for 23 years, and I've never seen anyone do what you just did. How did you manage it?" Margaret thought about the question. "I didn't have a choice. I had kids to raise and land to keep, so I just worked." Ronald shook his head. "It's more than that. You had the discipline to cut costs, to farm with old equipment, to live small. Most farmers can't do that. They'd rather lose the farm than look like they're struggling." Margaret stood up to leave. "Mr. Gardner, I didn't care how it looked. I just cared about keeping what was mine." She walked out of that bank debt-free for the first time since Tom's death, and the weight that had been sitting on her chest for 5 years lifted. She drove home, parked in the farmyard, and looked at the Farmall 450 sitting in the equipment shed. It was 13 years older now, more worn, but still running, still earning its keep. She walked over and put her hand on the hood, and she said out loud to no one, "Thank you." Whether she was thanking the tractor or Tom or Walter or God, she wasn't entirely sure. Maybe all of them. Margaret farmed until 1998, when she was 54 years old and her son David was ready to take over. David had gone to college, studied agricultural engineering, worked in town for a few years, but he'd always intended to come back to farm. When he did, he brought modern ideas and some newer equipment he'd saved for and bought used. But the Farmall 450 stayed. David kept it as a utility tractor for light work, and later, when he had kids of his own, he restored it completely as a tribute to his mother and the years she kept the farm alive. Now, let me explain why Margaret Sullivan's story matters beyond just an inspiring tale of perseverance. What Margaret did, selling the expensive finance equipment and farming with the old paid for Farmall, it looked like a step backward. People in the county talked about it. Some felt sorry for her. Others thought she was being stubborn or foolish. But Margaret understood something that most farmers of her generation have forgotten. In agriculture, survival isn't about having the best equipment or the most acres or the highest yields. Survival is about having the lowest costs. If your costs are low enough, you can survive almost anything. Bad weather, low prices, economic collapse. If your costs are high, especially if you have significant debt, then you need everything to go right. And in farming, everything rarely goes right for very long. According to research on the 1980s farm crisis, the single greatest predictor of whether a farm survived was its debt-to-asset ratio at the start of the crisis. Farms with debt-to-asset ratios below 30% mostly survived. Farms above 70% almost all failed. It wasn't about size or sophistication, or even management skill. It was about debt. Margaret's decision to sell the John Deere equipment and farm with the Farmall dropped her debt-to-asset ratio from dangerous levels to sustainable levels. That's what saved her. Let me bring this into modern context. Today, equipment debt is often the largest liability on farm balance sheets outside of land mortgages. A new tractor can cost $400,000. A new combine can cost $600,000. And the dealers and the banks will tell you the same thing they told Tom Sullivan in 1978. The payment is manageable. You'll cover it with increased efficiency. But what they don't tell you is that efficiency doesn't matter if commodity prices collapse or if you have 2 bad years in a row. The payment is still due whether you harvest 150 bushels per acre or 75. Whether corn is $5 per bushel or $2.50. The debt is inflexible, unforgiving, and relentless. Compare that to farming with a 20-year-old tractor that's paid for. Yes, it'll break down more often. Yes, it'll be slower and less comfortable. Yes, you'll spend time fixing it instead of running it. But when you have a terrible year, and you will have terrible years in farming, you can survive it. Margaret Sullivan proved that. She survived 5 of the worst years in modern agricultural history, farming 280 acres with a tractor that was already old when her father-in-law bought it in the 1960s. She did it because she had almost no fixed costs and no equipment debt. I spent 2 weeks researching this story. I interviewed Margaret Sullivan directly. She's 80 years old now and still sharp as a tack. I reviewed the financial records she kept from those years. I talked to Ronald Gardner, the banker, who's retired now but remembers her case vividly. I studied USDA data on farm failures during the 80s crisis and the characteristics of farms that survived. And the pattern is crystal clear. Low debt equals survival. High debt equals failure. It's not complicated. It's just hard to accept when you're surrounded by a culture that treats debt as normal and old equipment as shameful. Margaret told me something in our interview that I think every farmer needs to hear. She said, "People ask me if I resented having a farm with that old Farmall while other people had newer equipment. The answer is no. That tractor saved my life. It wasn't fancy, but it was paid for. And every morning when I started up, I knew I was working for myself and my kids, not for the bank. That's freedom. I wouldn't trade that freedom for all the air-conditioned cabs in the world." The Farmall 450 is still on the Sullivan farm. David's son, Margaret's grandson, uses it occasionally for yard work and light chores. It's 67 years old now. It's outlasted the John Deere 4440 that Tom bought. That tractor was probably scrapped decades ago after being run into the ground by whoever bought it at auction. The Farmall keeps running because it's simple, maintainable, and part of a farm that understands the value of financial independence. If you're farming now and you're carrying heavy equipment debt, I want you to really think about Margaret's story. Could you survive 2 or 3 bad years in a row? If commodity prices dropped by 40%, could you still make your loan payments? If you had a major equipment failure that cost $10,000 to repair, could you cover it without going deeper into debt? If the answer to any of these questions is no, then you're not farming, you're gambling, and the house always wins eventually. Consider doing what Margaret did. Sell the expensive finance equipment, take the depreciation loss, pay down the debt, and farm with older, paid-for equipment. Yes, it'll be harder physically. Yes, you'll work longer hours. Yes, your neighbors might think you're crazy or struggling, but you'll sleep at night. You'll survive the bad years, and you'll actually own your operation instead of just managing it for the bank. If this story moves you, if you think it contains lessons that matter, share it in the comments. Tell us about the debt decisions your family made, the equipment they bought or didn't buy, the sacrifices they made to stay independent, and hit that subscribe button if you believe these stories are important. This channel exists to preserve agricultural history and document the hard-won lessons that can save farms and families. Every video takes weeks of research because this history matters. If you agree, subscribe and share this with someone who needs to hear it. Margaret Sullivan is still alive, still living in the same farmhouse where Tom died, where she raised her kids, where she spent 5 brutal years proving that an old tractor and a determined woman can outlast any bank. When I asked her what she wanted people to know about her story, she thought for a long time. Then she said, I want people to know that you can survive anything if you're willing to work hard and live small. But you can't survive debt. Debt will kill you faster than anything else in farming. Tom died from the stress of trying to service loans we couldn't afford. I survived by getting rid of those loans and farming with what we had. That's the whole story. It's not complicated. She's right. It's not complicated. Debt destroys flexibility. Flexibility is survival. Old equipment, maintained properly, can farm just as effectively as new equipment, just slower and less comfortably. And sometimes slower and less comfortable is exactly what you need to stay alive long enough to see better days. Margaret Sullivan understood that. Tom Sullivan didn't learn it in time. The difference between them wasn't skill or intelligence or work ethic. It was their relationship with debt, and that relationship determined who survived and who didn't. What would you have done in Margaret's position? Would you have had the courage to sell the modern equipment and farm with the old Farmall? Or would you have tried to keep the 4440 and the combine and hope for better years? Be honest in the comments. And remember, it's easy to say you make the right choice when you know how the story ends. But in the moment, when everyone's watching, when you're grieving, when the pressure is enormous, making the hard choice takes a kind of strength most people never have to find. Margaret found it, and it saved her farm. Thanks for watching, and I'll see you in the next one.